I still remember the moment I picked up Rich Dad Poor Dad for the first time. At that point, I was skeptical about real estate investing. I had grown up believing that buying a home was the ultimate financial goal, a sign that you had made it. But as I turned the pages, Robert Kiyosaki's words shattered everything I thought I knew about wealth, assets, and property investing. Little did I know this book would change the way I looked at real estate forever. The illusion of homeownership as an asset. Growing up, I had always been taught that owning a home was the smartest financial move. Buy a house, pay off your mortgage, and you'll be set for life, my parents would say. That was the poor dad mindset Kiyosaki talked about, the idea that your home is your greatest asset. But then, Kiyosaki introduced the concept that an asset is something that puts money in your pocket, while a liability takes money out. That hit me like a truck. I realized that my dream home wouldn't generate income. It would only cost me money in mortgage payments, taxes, and maintenance. Suddenly, I saw real estate differently. If I wanted to build wealth, I needed income-generating properties, not just a home that looked good on paper. The power of cash flow over appreciation. I had always assumed that real estate was all about buying low and selling high. But Kiyosaki shifted my perspective. Instead of focusing on property values increasing over time, he emphasized cash flow. This was a light bulb moment. I started seeing properties as potential money machines, assets that could generate passive income every single month. Instead of buying a home and waiting for its value to increase, I could invest in rental properties that paid me every month. That was a game changer. Good debt versus bad debt, using leverage wisely. Like most people, I was afraid of debt. I saw mortgages and loans as burdens, things to avoid at all costs. But then Rich Dad Poor Dad introduced the idea of good debt versus bad debt. Bad debt, like credit cards and car loans, drains your finances. But good debt, like a mortgage on an investment property, can make you money. If you buy the right property, your tenants effectively pay off your mortgage for you. That realization completely flipped my view on borrowing money. I started seeing debt not as an enemy, but as a tool to build wealth. The hidden wealth of financial education. One of the biggest takeaways from Rich Dad Poor Dad was the importance of financial education. Schools teach us how to work for money, but they don't teach us how to make money work for us. I realized that wealthy people think differently. They understand how to use taxes, leverage, and investments to their advantage. Meanwhile, the average person follows the traditional path. Get a job, buy a house, and hope for the best. I didn't want to follow that script anymore. I wanted to break free. My first step into property investing. Inspired by the book, I made my first move. Instead of buying a house to live in, I bought a small rental property. It wasn't fancy, but it had positive cash flow, meaning it made money every month after covering the mortgage and expenses. That small step changed everything. Today, I continue to grow my real estate portfolio, applying the lessons I learned from Rich Dad Poor Dad. I no longer see property as just a place to live. I see it as a vehicle for financial freedom. If you're still thinking about real estate the traditional way, it might be time to rethink your strategy. Rich Dad Poor Dad taught me that the key to financial success isn't just owning property, it's owning income-generating assets. So, are you following the poor dad's mindset? Or are you ready to start thinking like the rich dad? Let me know in the comments how this book has changed your perspective.